Okay, so let's bring in currency expert Jens Nordvig, Exante Data's founder and CEO. He's also co-founder and CEO of Market Reader, a Wall Street analysis platform. Jens, you and I both have backgrounds, you much more so than I, in foreign exchange, currencies, commodities, rates, and everything else. What do you think is the real situation with the dollar right now? Is the shine coming off, or is this just something technical to watch out for?
A lot of investors were very optimistic about the United States going into this year. A lot of people had very, very elevated U.S. equity exposure in their international portfolios, happy with owning U.S. treasuries that had higher yields than most other bonds, right? And now we're suddenly facing just an accumulation of shocks, trade shocks, shocks to foreign policy that people didn't expect. And people are getting very uncomfortable having these very big U.S. exposures in their European portfolios, Canadian portfolios, Australian portfolios. I could go on. And we saw it in the price action last week. Very, very dramatic. And it's continuing this week, right, with some of the biggest dollar moves we've seen for decades as these asset allocation shifts get in motion. People reducing U.S. exposure. And we don't have to talk about, is this the reserve currency status that is in question, but people just have too much exposure. We've been used to talk about U.S. exceptionalism, right? And certainly from a cyclical perspective, we have a lot weaker growth outlook. That's one part of it. But also structurally, there are some question marks about how safe U.S. assets are, and those two things together is a problem.
Joining us here at Post 9 is Senator Elizabeth Warren. She's also just signed a new letter to Commerce Secretary Howard Lutnick and Treasury Secretary Scott Bessent, alongside nearly 50 other Democrats, criticizing President Trump's tariffs as a corrupt scheme. Welcome, Senator Warren. It's great to have you here at Post 9. What a treat. All right, let's start on Powell.
Sure.
Just as a reminder, so Congress gives the Fed the authority. Can the president terminate, not that he said he's going to do this, but can he terminate Powell's chairmanship earlier than his end in term?
No.
Under no circumstance?
Nope.
So that's not a concern for you?
Well, I thought we were talking about legally, right? But this is a president who has shown himself willing to violate laws everybody sees, including willing to violate the Constitution of the United States. So that obviously puts things a little more in play than we ever would have guessed. But I really want to make a pitch here for a second about the importance of Powell staying in his job. Look.
And it's unusual coming from you. You're very critical of him.
I have tangled with him on a regular basis about both regulations and interest rates. But understand this. If Chairman Powell can be fired by the President of the United States, it will crash the markets in the United States. The infrastructure that keeps this stock market strong, and therefore a big part of our economy strong, and therefore a big part of the world economy strong, is the idea that the big pieces move independent of the politics. That somebody is making his, their, her best decisions economically and independently. We understand that if the New York Stock Exchange, if interest rates in the United States are subject to a president who just wants to wave his magic wand, this doesn't distinguish us then from any other two-bit dictatorship around the world where everyone knows what your big investment risk is. Will that dictator wake up in the morning and have a tummy ache and decide to cause this problem or favor that friend? That's why we need to strengthen the infrastructure.
But I know you are not the president, but you have also been very vocal in terms of wanting Fed Chair Powell to cut interest rates, especially when he was raising it. And you and I have talked about, like, maybe you shouldn't inject your politics into the Fed. That's essentially all he's doing here.
That's the question. When he talks about terminating Powell, come on.
No, he said his termination cannot come soon enough. His term ends next year.
You think he was saying term in? Look, I hope he was saying term in. I think what he's doing is testing the waters. Does he think he can get away with firing Powell and all of you won't raise any hell about that? He's checking that out, and I'm just saying, for the strength of our country, I hope all of you are pushing back at this point.
Well, the bond market certainly would push back significantly.
Absolutely.
We're not seeing as much today. I do wonder here, they have taken a case to the Supreme Court in which they're testing the ability of the president to fire heads of independent agencies. Is that an important decision? It may be sometimes until we hear of it, but if the court should side with the Trump administration, does that embolden him to move faster on Powell, for example?
Absolutely. That is the question that's going to the United States Supreme Court. But I just want you to note, even the government's briefs so far, at least as they've laid their argument out going to the Supreme Court, even they are itchy-scratchy about saying that would include the Fed. You know, can we just remember why we do this? Going back to 1863, our first financial regulator, the Office of the Comptroller of the Currency, still exists today. What did we do? We made them right in the middle of the Civil War. We decided we've got to have a bank regulator for stability, right? Financial stability in our country. We made that bank regulator financially independent of Congress. It was a way to try to say, look, we understand what happens if elected officials, Congress or the President of the United States, can hear from a constituent, can hear from a donor, and then bring pressure on those financial regulators. Ultimately, it undercuts the entire economic system and makes us all vulnerable.